we were talking about the commodities markets with Arlan Sudermmann and Mac Marshall from Balcony Consulting and Stonex Financial for Today in Kansas City from National Farm Broadcasters Association in Kansas City. How are you today?
Doing very well, Cesar. It's great to be back with you.
Doing fantastic, Cesar. It's wonderful. I feel like this has been a couple of years in the making. We finally get to do this in person, so it's great. I love NAFB. It's great to be back here.
Let's start with our conversation about updating from Federal Reserve with the interest rate for right now with Arlan.
Yeah, we saw the Federal Reserve cut its interest rate by another 25 basis points. The question is, where do we go from here? The market has really dialed back its expectations of additional rate cuts going forward until it kind of sees how the Trump administration goes. If we look at what Federal Reserve Chair Jerome Powell did after the first Trump election, he had his staff all work up scenarios and recommendations for an aggressive economic growth pattern that could have inflation involved, and they put in expectations for rate increases. This time around, we're in a little different scenario, but I anticipate that at the December meeting, we're going to see some of that similar guidance. It may or may not have rate hikes in it. The market's not pricing that in now. Probably continue 2 or 3 more rate cuts over the next 8 to 9 months, but a rate hike is a possibility.
How about the commodities with the cut?
Well, commodities have generally been going down since the election. It's kind of a macro market. On Wall Street, there's many advisors out there telling money managers what to do in various events that happen in the world, and the election is one of them. And they've been saying with the election, expect that we'll see tariffs, that we'll see inflation, and that those tariffs will help the United States, maybe with some inflation, but hurt economies like Europe, Mexico, China, and others. So therefore, the currency markets have been favoring a strong dollar, weak currencies for our competitors, and as well some of our customers. And so that means also with the possibility of tariffs, the trade war with China, that means buy the equities and sell the commodities. And that's generally been the trend that we've seen since the election.
Mac, how is the beans biofuels?
Really relevant question, Cesar. There's a lot going on here. And, to kind of follow up on some of Arlen's points here, there's a lot of uncertainty in the marketplace, particularly around biofuels at the moment. We're originally supposed to get additional guidance on the Clean Fuels Tax Credit, 45Z in the Inflation Reduction Act, supposed to come out on January 1. We're less than 50 days away from that, and are looking for additional guidance on it. Nothing's coming out at this stage, so I think there's concern that we'll get into the new year without additional guidance on some of the practices, et cetera, that are needed for the right credit levels for using soybean oil and by extension corn oil as a feedstock for sustainable aviation fuel. Now, of course, that's not the only thing going on with biofuels right now. There's a whole other host of interesting dynamics. I was really disappointed last week when I saw that California, under their low-carbon fuel standard, had imposed a vegetable oil cap of 20% on their feedstocks. I think, that's definitely unfortunate because, the critical feedstocks that we can produce with the most efficiency in the United States is soybean oil. So we'd love to see that get used more. Compounding the issue with feedstocks as a whole and biofuels is that we've had this tremendous influx of foreign feedstocks really over the last nearly 3 years. If you look at imports of used cooking oil and tallow, from 2000 to 2021, we imported, I think, about 5.3 billion pounds of used cooking oil and tallow. Since from January 2022 through now, through the latest trade data, it's over 12 billion pounds. So in just over nearly 3 years, you've had more than double the feedstocks that have come in over the prior 21 years combined. It's crazy. We're getting a lot of used cooking oil from China. That's definitely the primary market from which it's being received, but we're also seeing new trade flows come up. Indonesia and Malaysia, two large palm oil producers, they combined produce over 80% of the world's palm. Now we're starting to get more quote-unquote used cooking oil coming in from Indonesia and Malaysia. And then compounding all of this, you look at the major beef producers around the world, Argentina, Brazil, Uruguay, Australia, just for four there. Brazilian tallow is coming in large volumes as well. Now we've imported, tallow, long term, whereas UCO has really been kind of a newer and emerging trade flow. But with the Brazilian tallow, we're seeing that scale up, and in recent months we've seen additional imports from Uruguay, Argentina, and Australia. And why is this all happening? And why is this happening at the expense of soybean oil? Well, under the carbon accounting and scoring, these quote-unquote waste stream feedstocks, which are really secondary products, they have a much lower carbon intensity score, and the credit for using these feedstocks is a lot higher. Now, important point to consider in all of this is the life cycle accounting for these feedstocks doesn't truly address the full life cycle. The tallow, the carbon accounting starts after the tallow has been collected. It doesn't account for the carbon of producing cattle or grazing, or in the case of used cooking oil, it's not taking into account the production of that used cooking oil from whatever was grown in the ground or whatever animal fats that might have come from as well. So there's interesting dynamics. We really just want to see the appropriate playing field that is going to, I think, best advantage American energy production while leveraging our expertise and true efficiency in what American farmers can do year after year in producing a highly efficient and bounteous crop.
Do you have some concerns about the biofuels for next few months?
I do. I absolutely do. I think there's, there's obviously looking for policy guidance on all of that. I'd love to see, fixes in the Clean Fuels Tax Credit for 45Z that makes a distinction, that there's a preference for domestic feedstocks. Now, I'm not saying there isn't a place for imports. There's always a place for imports. The feedstock question is going to have to be answered by a whole mosaic of feedstocks. And some of those, of course, will be imports. But we should be leveraging what we do in the United States first, which is produce soybean oil and, of course, canola oil and corn oil as well. The other thing, too, is, producers, given that there's uncertainty in the policy coming forward, that leads to an environment where you have uncertainty and unpredictability, and it's hard to do business planning in that environment, which is kind of a hallmark of farming. Farmers are faced with weather, they're faced with commodity price volatility, and then there's this outside impact of policy. And when there isn't strong guidance there to make a more predictable market, that's a challenge. Think about some of the other implications that were in 40B within the Inflation Reduction Act. You got to have cover crops, and you got to have limited till. Well, there's a large percentage of farmers that can't use cover crops in some parts of the country just because of the latitude and the snow cover. So these are all things that have to be thought about if we're truly going to see this nice integration between ag and energy to, again, advance decarbonizing the economy while building a more prosperous farm economy.
What is the yields for right now? Did you hear about the beans yields in central U.S.?
Yeah, we've certainly seen the yields pull back. The old saying that big crops get bigger, well, I guess it's big crops get bigger until they don't. And the way we finished this year out is very dry. You have to ask just how big these crops might have been had we had one more good rain. I was talking to a farmer back in late September whose beans were being harvested, and he's complaining about just harvesting BBs out there, very small beans. It had been so dry, but yet they were yielding 82, 83 bushels to the acre. And it really makes you wonder how big these crops would have been. But the market's priced that in, so now we're shrinking it So the supply side of the balance sheet has largely been factored in with the bearishness in that report. Now we still have the January numbers to come out, and we may see some surprises there, but my bias would be, if anything, it may be adjustments to the downside. We'll see. So the focus now is shifting to the demand side of the equation and where we end up with that. And as Mac was sharing, I think there's some real concerns about soybeans with processors not knowing the 45Z requirements or are backing down on their plans for producing fuel as we go into the end of the year and the first quarter of next year until we have these 45Z requirements. That means poorer crush margins, lower crush levels overall. Talked to our people in Brazil yesterday, and boy, the crops down there sure look good right now. They've had really, after a late start, good weather. So for soybeans, it's a concern for me. And I think that was shown in the last WASDE report, where USDA cut 80 million bushels off of ending stocks, but left their price unchanged for the year. And I think that speaks volumes about their expectations for what they have is going to be adequate, and we got a big supply coming south of the equator here in another couple months.
How is the beans harvest in this state of Missouri we're in for right now?
Yeah, pretty well. Some amazing yields, some problem areas, but it's all in the bin now. The farmer's kind of locked the bin door until he can get a price he likes. That's being redefined now. What does he like? What is he willing to accept? And I think the overall focus, after having a few years of some good marketing opportunities, it's now shifting into defense mode a little bit more, protecting the equity we've built in the farms in recent years, and trying to take advantage of rallies, take advantage of basis opportunities, shopping around for that basis, take advantage of the carry in the market, take advantage of crop insurance opportunities, and really focus on defense, protecting the equity in the farm.
Let's go with livestock markets. How is the cattle markets and hogs markets for today's open?
Well, a little bit weaker overall today. Both markets have been pulling back a little bit. I think the surprise has been in the hog market, where we were braced for this big wall of pork to come after that last quarterly hogs and pigs report. It may have been one of the biggest misses USDA's had in a quarterly hogs and pigs report. We have seen some big numbers, but not near as big as what they said. And demand has been pretty solid, both export and domestic, although the strong dollar now is starting to hurt a little bit on the export side. We've seen cash hogs pull back a little bit, and that's caused record ownership by managed money in the hogs as of Friday's CFTC report. It spooked them a little bit, so they're pulling back. On the cattle side, though, after 3 weeks of perhaps our biggest slaughter of the year, we increased the supply of beef that was available to the market above what the demand was. Saw a big drop in demand for choice cuts, and that has hurt the psychology in the market. The funds have been liquidating, finding a new level, consolidating now above that $180 level, and waiting for this week's cash trade to really provide some direction. General expectation will be steady to weaker this week again.
Do you have any final thoughts or recap of our conversation about updating on crop report and the biofuels sector?
Well, I think, again, we need to really focus on our marketing plans and work with somebody who can give you some perspective, like you do work with an agronomist, like you work with an insurance agent, just to give added perspective, and take a defensive mode toward your marketing here as we go through this bottom of the cycle. I've seen a lot of these cycles in my 4 decades of working in the industry, and we just got to protect the equity while we're in them.
Yeah, I think that's really well said, Arlan. It's a cyclical industry that we're in the farmers face, and we're in a downturn now. We've been through these before. There's certainly a lot of uncertainty in the market, but that's the beauty of the passage of time, is that as time passes, you do get more clarity. Certainly that's something we want more and more in the policy realm, particularly as it pertains to biofuels. But let's look beyond that. Let's think about the animal ag markets too, and opportunities there. I'm always been kind of a corn and bean guy throughout the course of my career, so the animal feed markets are important, and some of the shifts that we're having in domestic processing capacity. Yes, a lot of that being driven by energy, but that means we're going to have a lot more meal coming on the market, and I think that's opportunity for, the U.S. to, look differently at export markets, to and to advantage customers around the globe that maybe haven't had the ability to purchase that before. So exciting times. I think we'll be moving forward, but it'll be a challenge, particularly when we have those big Brazilian crops out on the market. But we've been through these things before. I remember a couple years ago we saw those pretty big cuts to South American production come in January, February. Not saying that's going to happen now, but commodity markets are wild.
Thanks, you guys. That's Mac Marshall from Balcony Consulting and Stonex Financial with Arlan Sudermmann from Kansas City for nafb. I'm Cesar Delgado from Back Roads of Illinois.